Hey, everybody, it's RC Peck, the founder of Fearless Wealth and the creator of the Fearless Wealth portfolio. And this is my first market situation report for 2013. Happy New Year to everyone. And it feels like it's been weeks or months since I've had one of these reports for you, when in fact we only took 1 week off for the Christmas holiday. But here we are, it's Saturday, January 5th. And there's a question that I've been asking myself, and something I want to know the situation of and what's going on with it. And the question I've been asking myself is, what does 4 more years of Obama mean for the markets? What performed well? What didn't perform well? What did Bernanke at the helm of the Fed do over the last 4 years? What markets did the best? And which got me thinking, what will do the best? So what I want to do is go through the last 4 years, just look at a few sectors, major sectors, and see how they did for the first term of Obama, and maybe talk or have some insight into what may happen for the second term. So, of course, the first thing I wanted to look at was the S&P 500. What happened with the S&P 500 over the first 4 years that Obama was in office? And the answer is it went up 65%. Which is actually really impressive. Now, we're not going to go into what happened the previous 4 years or the previous 8 years before Obama got in. We're just going to go over the last 4 years. But still, the S&P went up 65%, which includes the dividends. So clearly, whatever Obama was doing and Ben Bernanke was doing was not lost on the stock market, up 65% over the last 4 years. And then I wanted to know what happened to the 10-year bond, U.S. bond, and the yield on it fell 22%. And basically the way I looked at that was, this is kind of Ben Bernanke's war on savers. You want to save? Ben Bernanke's at war with you. He does not want you to save, and so much so that he has dropped the 10-year bond down to about 1.8%, which is almost nothing considering inflation is probably running 2 or 3% a year. So cheap money is here to stay. The 10-year bond is going to stay low. The 30-year bond is going to stay low. Mortgage rates are going to stay low probably for the next 2.5 to 3.5 years. That's all of 2013, all of 2014, and most likely all through 2015. And could go beyond that because the new rates are being connected to unemployment and the GDP. So the first 4 years of Obama, he crushed savers, and basically saying is, I don't want you to save savers. Shame on you for saving money. And that's not going to change over the next 4 years. The next thing I want to know is what happened to the U.S. dollar. And over the first term of Obama, the U.S. dollar fell 12%. Now, here's the thing. It fell 12% against other printable currencies. So it probably fell more, but just against other printable currencies, it lost 12% of its purchasing power. And that means that's 12% less of your purchasing power. So if you start off with $100,000 in cash 4 years ago, externally, you have lost. What I mean by externally, if you go abroad, you lost $12,000 of that $100,000 in purchasing power. So that's real money being lost. Even though you see the same $100,000, you really lost $12,000, or really that $100,000 is really worth $88,000. And that's why people are feeling poor, which also leads me to believe that over the next 4 years, people, or the bottom 98% of society in the West is Europe, Canada, the US, Australia, Japan. The bottom 98% of those countries, of those societies, will continue to feel poorer and poorer because those countries, maybe not Australia, but yes, to a smaller degree, but all those Western countries are printing money. And that means the bottom 98% are going to feel poorer and poorer. And then I wanted to know what happened with international stocks. And this was interesting. International stocks were only up 36% over the first term of Obama, while S&P 500 or U.S. stocks were up 65%. So almost, not quite, but stocks in the U.S. went up about 90% more than stocks internationally. And my takeaway from that is, as bad as you think things may be in the United States, they are worse in Europe, and they are worse in Japan, and they are worse in other countries. And still today, regardless of what you think or how you think this country is being run, relatively speaking, it still feels safer from a world point of view to invest money into US stocks than international stocks. And then the last thing I wanted to know was, well, what happened to gold? Gold is one of only two non-printable currencies in the world. Silver is the other one. And so I wanted to see what happened to gold over the first term of Obama. And gold went up 88%. Now, I think this is probably most remarkable out of everything I've shown you, because even still today, with gold ending higher 12 years in a row, which I checked, I don't think has ever happened the last 110 years of investing, where an asset or a sector finished the year higher every year for 12 years. Gold just finished that, and I'm willing to bet you it will finish higher for 18 years in a row. And so gold, still hated, still ridiculed, is really still leading. And what's just so interesting is people hate it more today than they've ever hated it in the last 12 years. And it's probably because if you look at the screen here, the price of gold has gone sideways for about the last 18 months. And that just feels really bad to people. And so I wanted to have a little bit more fun. And so I wanted to look up 4 more things, like what was the best performing stock, what was the best performing sector. And so I found out of the 1,000 largest stocks traded in the US, Liberty Media, which is an entertainment company, was the best performing top 1,000 stocks. And it went up 2,363%, or almost 24 times it went up. And if you want to know where Apple kind of came out in that placement in the top 1,000, Apple was the 27th best performing stock out of the top 1,000 biggest stocks in the last 4 years. Then I wanted to know what was the best sector. So the best sector turned out to be cable TV. And I thought about this, and this really makes sense. As people get poorer, the one outlet they can still have is coming home from work or being unemployed or spending the whole week in front of their cable TV, where they can check out, where they don't have to think about their current life position or the direction their life is going, and they can just zone out and watch reality TV or sports or documentaries or whatever. There's gazillions of channels, and it was the best performing sector. And it's really understanding because it's kind of a coping mechanism. So cable TV was the best performing. I'm going to do one more sector, but recognizable sector, and you'll know what I mean when I say that. The best performing country over the last 4 years, it was Turkey. It was no country in the West. All the best performing countries around the world over the last 4 years, in that top 10 were all non-Western countries. And Turkey was the number one, being up 145%. Compare that to what the U.S. did, 65%. It just absolutely crushed it. And so that is another telltale sign of what's going to happen over the next 4 years, which is the rise of the East. The West is printing money. They are over indebted. And the East, generally speaking, they save more. Their middle class is just getting built. They're younger countries, and they're coming up. And to me, that's really exciting. And then the best major sector. When I say major sector, there's typically 12 to 18 major sectors that people follow. Cable TV is not one of those major sectors. But of the major sectors that people follow, consumer discretionary was up 125%, almost 100% better than the S&P 500. So that was really interesting. People are spending all that money printing and deficit spending. What do we have? Maybe $7, $8, $9 trillion between the deficit spending and Bernanke printing. People are spending money on clothes and media. So I thought that was really interesting. My next monthly strategy gathering is coming up January 8th. I'm going to be interviewing Parker Vogt. He is an expert on, he's a precious metals dealer, and he has a really, really good inside view on what is going on with precious metals, what the big buyers, what I call the whales, are doing. And you're going to want to listen to that interview because it's very telling, because the people who are buying from him are not just the top 1%, but they're the top 0.1% of this country. And I have to say, how they behave is something you want to take notice. Of course, we'll do extensive Q&A about what's coming up this year. We'll do speed investing, any ticker symbol you want to look at. I'll deconstruct it in 60 seconds or less. And then we'll do up-to-date views on stocks, bonds, currencies, commodities, precious metals, real estate, the strategies. I'm so glad you're here. I'm really looking forward to 2013. I'm really excited about it. And so I look forward to seeing you on that call. Y'all take care, and I will speak to you then.